Hi everybody, this is Kel from Trade with the Boys, and now we are followed closely by a lot of people because we're given three numbers to the market and seemingly the market just seemed to follow. The first number we gave was 24,255, which the market back then was at 26,000, and the market hit 24,255 six times, rebounding six times in a row, right before it came down. The next number we gave the market was 22,908, remember? Yes, indeed, the market went down to the point, and imagine it rebound instantly at that point. The third number we gave was a little bit much lower. It was 21,560, which a lot of people have been asking, is it possible? Because the Dow Jones high is 26,951. To go to 21,560, we're talking about 5,000 points or more. But last night, or I will say Christmas Eve, sorry, we saw the Dow Jones slamming down to 21,800. And as a matter of fact, during the Dow futures, the last 15 minutes, after the market closes for the cash, it went down 130 points further. The closing price was 21,700. Now, we seriously don't know what's going on, but we know that back in October, there were many bulls. Remember that? Back then, the Dow Jones was trading at 25,000, 26,000, 26,500 to the high of 26,951. And back then, there were so many bulls around us talking about the Dow Jones going to 30,000, 32,000, and even have 50,000. Remember? Yes, incredible. Some were saying that the bank shares go to rocket high. But we stick to our principle, we stick to our colors, we stick to our PSV3. We know that the price is going to come down, and indeed it dived. So what happened on Christmas Eve is the worst Christmas Eve ever, whereby the Dow Jones dived 600 points below 22,000, and the S&P, yes, and the S&P had entered the bear territory. Yes, I'll show you later. Yes, finally entered the bear territory, and this is something very scary on a Christmas Eve. Seriously, it is very clear that Stephen Minchbonskin, basically give the phone call to the sixth largest bank is really a joke. I mean, no point calling them and asking them is liquidity or fine. What's your objective here? We should be doing something more than that, or at least do something more productive, you may imagine. So what happened? You can see the Dow Jones on the Christmas Eve night. The Dow Jones went down. Went up about 22,100, staged a very strong rebound right here, and after that they gave in to the selling. He still hover at the psychological level of 22,000, and when he broke below at about 1 a.m. Singapore time, wow, the selling came in pretty fast, very fast. And today, because the Japanese do not celebrate Christmas, the Japanese index lost 1,000 points or 5% today. Now this is very scary. The Shanghai index actually was down by almost 2%, but towards the end of the day, it basically recovered and down only a mere 0.2%. So we only hope that the Chinese market finding a bottom and give the current Dow Jones maybe a little bit of chance in the recovery stage. Seriously, the treasuries are not concerned about liquidity, and seriously, this guy, I really don't know what he's thinking. Now, I really hope that he knows what to do, because this is going to be very scary if he doesn't do it properly. Because now we have saw crude oil have plunged 6.7%, settling at the 18-month low at 42.53. Now remember, when crude was at 46, I said very clearly, we could see 41 series, and we are pretty near there. I'll explain to you how's the so-called relationship between the Dow Jones and crude oil shortly, So now, bears are everywhere. The worst is yet to come. Global bear market is getting started. You go on Google, CNBC, Bloomberg, CNN, everybody is calling for a sell. Now, this is something what I said back then. When the Dow Jones was 26,951, everybody was bull, right? Now, anything you click on the internet, everyone is a bear. This is whereby I want to let you understand this. Now, this is S&P itself, the red line, versus the S&P consensus forecast, which means that what the boys were reading. Now, you can see most of the time when the analysts are calling for a sell or a buy, they are pretty in line, right? You see that? Since 1999, basically they are pretty much in line. But this time, look at it. Look at it this time. This time round, they are looking at 3,000 level on average, so 3,050. But the current S&P now is 2370. We are 700 points away from the normal consensus, and this is very big difference. In fact, the difference is the largest ever. In the last about how many years? Almost 20 years history. Oh my goodness. So what is actually happening? What is causing this? Now I've been saying this, that something have to give when someone take from the market. Right, so let's look at the volume over the composite volume on the last session before Christmas. So since 2009 to 2017, overall, the volume is always rather what they call light, before Christmas. But on the 24th December, the end of the day data projection was nearly 3 billion. Okay, the volume was 3 billion, the biggest average. What's the average for 1.1? We want 3 times of this. So there's 2 works on it. One way is that it's full of sellers that you are looking to panic and sell tomorrow. But on the flip side, if everybody is selling and there's a transaction being done, who are the buyers? Exactly, you have to think from that angle. So now what we can see right here, okay, it's pretty clear that the Federal Reserve, okay, is coming out. You can see that basically Federal Reserve is tapering off. They have tapered off, okay, off their balance sheet. They're looking at basically $50 billion, okay, every month. But of course, now there's a bit of consensus saying about 36 billion, but it's still money, right? So you can see that when they are tapering off, okay, all right, the stock market got hit. It's very sensitive. Okay, this is very, very important information. They are selling, okay, they are selling. That's the reason why the market now got no bad reason, no bad earnings, but the market just sell on its own. This is what is actually really happening. The same thing that propelled the market up back then, because of the Federal Reserve coming in to short the money with the QE1, QE2, QE3, the same thing now is basically hindering or causing the selling in the market. So we can now understand, very important thing, that what is actually happening around the whole world. Now look at this, is the Dow Jones chart I promise you. Look at the Dow Jones chart in October. This is the highest. This is also crude oil. So the moment the Dow started to sell, or the crude oil started to sell, the Dow followed. Yes, because you guys understand this. If the world economy is depending on one sole commodity like crude oil for energy, if crude oil demand basically will disappear or not longer there and supply go overwhelming, obviously the entire economy is not going to do well, right? This is pretty clear. So now what is going to be frightening is this. Look at the S&P 500 chart now. Now we have said before at 2940 that was the highest point. We gave you some numbers, very clear numbers, and we mentioned this. After 2499, the next number the S&P would be going will be 2352, and oh my god, you can see that yesterday the S&P closed at 2350, perfectly the level that we mentioned. And now this is going to be a key point, because this is actually now 2 points below the bear 2 points into the bear territory. But if you look on the longer scale, look at the RSI example, you can see that the last time we see this number of below 20, it was basically here, whereby the market staged a strong rebound of almost 150 points. And ever since then, you can see right here, focusing on the bottom, we have not seen this movement until back in 2015, whereby the market after that went all the way down. Okay, it also came down. It was also a bear. It was a death cross of about 242 points. And then on a very strong scale, the market went in for a strong rebound right here. I'm going to bring you right here on this movement here. Very strong rebound, whereby the S&P basically went up by almost 140 points. Okay, so if you look at the Dow Jones now, you would see almost a similar thing. Okay, now let's look at the Dow Jones. Okay, right here. Now the Dow Jones, we give you all numbers, right? 24,255, 22,908, and now the next number with 21,560. I got this some weird feeling that the market might miss this number, or touch this number, if not, and stage a strong rebound from this very moment. I just have a good feeling for this. I might be totally wrong, okay? So look at the RSI reading now. It's basically at one of the lowest point at 20. RSI at 20. Now in global technical textbook, anytime hit 30 is always a buy on rebound, right? On 30. So that's why a lot of traders were caught the last 3 days because the market kept selling. So the technical traders are all burnt out, and now that everybody calling for sell, I got a strong little belief that there might be a chance of a technical rebound soon. Technical, right? Because the last time we saw the RSI going below 30 was long time ago. Let's go and bring you back into history. You can see that all the way I bring you back. The last time we saw this was in 2015, and same thing, the Dow Jones basically recovered about nearly 800 points from there. Okay, 800 points, but mind you, back then it was at 15,000. The Dow Jones at 15,000. The lowest you ever go for the RSI, the lowest reading back then was at 17 to 17. So unless you expect another wave of selling, but more or less we could see a forceful technical rebound pretty soon. Okay, pretty soon. All right, I can't tell you exactly when, but I think it's just around the corner. Okay, so tomorrow when we trade the market, if you look at our PSV tree, if you have it at home and you're using it yesterday on last Friday, on Christmas Eve, you can see what happened. All right, the market was still basically doing pretty well, but once the KSI turned red right here, you can see the KSI turning red right here. Okay, the market basically start to sell, and when the market breaks below opening price, it went all the way. Now look at how perfect is our indicator. Now this 22,017 was there since the morning, and we told our traders, once the market turned red, KSI turned red, the market might be challenging this trigger, and the market really hit this point, 22,017, and staged a strong rebound by almost 320 points. But of course, towards the end of the day, it closes below. Now, when it closes below period 2, we know that the market will go for next week of selling, which we can see that after that, the Dow Jones plunged another 200 points. Okay, so this is something very unique for us. And tomorrow morning, we'll know exactly what to do, and we'll be doing live sharing on TWB Boys, and hopefully you will get some tips from us, trading information from us, and make some good money in the market. All right, so with that itself, I come to the end of my sharing. It's a longer video than usual. I hope you like it. Have a great day. Goodbye.